Imagine if a single policy decision could wipe out trillions from the economy, leaving investors in a cold sweat of panic. That's exactly what's unraveling, as President-elect Donald Trump's tariffs unleashed a storm that rocked American stock markets to their core, painting a chaotic picture of recessions lurking like shadows in the dark. In this unveiling of economic turmoil, the repercussions of tariffs imposed by Donald Trump for his second term as leader of the United States are surging through every corner of society. He claimed these measures aimed to revive the golden era of the American economy, launching them right after assuming power. Yet, now, counterattacks from Canada, Mexico, and China mingle with the harsh reality that soaring tariffs are hammering everyday shoppers, detonating a marketplace explosion that feels like a thunderous earthquake underfooting. The Nasdaq, reeling from its darkest hours since 2022, clutched for air with a marginal climb of nearly 0.5%. But whispers of unease echo louder, with the stock arena bleeding out billions in fractures of value. Picture the frantic scramble, desks piling high with urgent memos, screens flashing red alerts and dimly lit trading floors thick with the metallic tang of sweat and coffee. Yesterday's nightmare trade devoured over $1 trillion from American stocks, the severest plummet since September 2022, leaving portfolios shriveling like wilting leaves under a scorching sun. Has this devastation peaked, or is a deeper abyss waiting to swallow fortunes whole? The headlines scream of despair, United States markets hemorrhaging more than $4 trillion amid Trump's bold maneuvers. Is this the endgame, a brutal reckoning for unchecked ambition? Saskatchewan's primary index spiraled downward today, while American exchanges endured their most atrocious session in decades. And the saga darkened when last week's slump bled into fresh openings, inflicting a colossal $1.7 trillion hit, the mightiest rout in modern annals, sizzling nerves and questioning every bullish promise from the Oval Office. What calamities lie ahead for Wall Street's future, and can America's economic engine roar back to life as Trump fervently insists? We're dissecting this web of volatility and geopolitical clashes next. Stay tuned for revelations that could reshape your understanding of power's fragile edge. Navigating this fiscal tempest, stocks nosedived amid fears of a recession engulfing the United States like an enveloping fog. The Dow shed almost 900 points, a heartbeat-slowing freefall. The S&P 500 tumbled 2.7%. The Nasdaq Composite cratered by 4%. Big tech, those titans of innovation, amplified their sell-off. Corporeal in the drop, Tesla's stock evaporated 15%, a gut-wrenching swirl as algorithms betrayed dreams of green revolutions and interplanetary voyages. Beyond just numbers, envision the office groans, papers rustling in anxious winds, phones ringing incessantly like alarm bells tolling doom. Other giants from the Magnificent Seven: Apple, Microsoft, Alphabet, Amazon, Nvidia. Meta platforms all withered between 2 and 5%. Their logos, once beacons, now dimmed in a haze of skepticism, scratching at the itch of unprecedented downturns. Will these tech behemoths crumble further, or emerge scarred yet stronger? Trump shrugged off doom over the weekend, dodging crystal ball visions of recession's icy grip this year. He declared, "I hate to predict things like that. There is a period of transition, because what we're doing is so big. We're bringing wealth back to America." The air thickens with tension. Is this optimism or reckless hubris blind to the storm brewing? Commerce Secretary Howard Lutnick countered boldly, proclaiming no recession looms for the United States. Yet, investors twitch at the administration's cavalier stance, fearing it triggers cataclysmic slumps while Trump's pro-growth zeal might ignite revival. But will this gamble pay off, or humiliate its architects in a spectacular betrayal? Analysts chime in with pointed barbs. Shelby McFadden of Motley Fool Asset Management slammed it as the first administration to openly embrace tariff pain. The jobs pulse still thrummed steadily, but shadows hinted at weakening tides, deportations and layoffs lurking like predators in the night. What if this beast awakens, feasting on livelihoods across the land? George Calwan, portfolio maestro at Penn Mutual Asset Management, warned of a jarring shift from prior regimes, brimming with risks of a jagged economic crash. This week's dip followed a stormy market week, stoked by Trump's erratic tariff tango threatening growth's delicate rhythm. The S&P 500 eked out last week's close with a 3.1% nosedive, the heftiest in 6 months, soaking investor spirits in doubt. Whispers of reversal stirred. 10-year Treasury yields dipped to 4.21% after flirting above 4.31% weeks prior. The Wall Street Dollar Index clung to lows unseen since early November, plunging its worst in over 2 years amid global ripples, economic tremors and policy quakes overseas. Could these shifts signal relief, or a prelude to even fiercer gales? Global ripples surged, Chinese equities tumbled over the weekend, as inflation data unveiled consumer prices sinking faster than anticipated last month. Europe's Stoxx 600 index eroded 1.3%, yet defense stocks rallied defiantly. February's inflation hints, consumer optimism vibes, and job vacancy beats loom as pivotal nexuses in days ahead. High valuations towering over history, policy upheavals in trade, and corporate earnings disappointments fueled this maelstrom, like Tesla's market cap dissolving over $125 billion in one whirlwind day. Will history absolve Trump's rebels, or condemn them to the dustbin of economic follies? Companies gasped for breath. Delta Airlines slashed profit outlooks, citing turbulences in fiscal skies. Investors brood over impending inflation unveilings, Federal Reserve rate riddles, and potential White House stabilizers. But why do United States stock realms plummet? A torrent of woes, trade ambiguities, recession specters, bloated equity prices mapping declines across sectors, crystallizing in tech's brutal hits. Tesla bled $125 billion in a blink. Apple and Nvidia crashing nearly 5%. The S&P 500 tech subindex cratered 4.3%. Delta's shares tumbled 14% as it halved quarterly earnings forecasts. Amid recession poisons intensifying, Trump reiterated, "I hate predicting these things. There's a transition because what we're doing is so big." Investment tactician Ross Mayfield of BAW observes the administration tolerating market hemorrhages, even courting a downturn for grander designs. Is this bold chess, or a suicidal plunge off fiscal cliffs? The White House fires back against recession ghosts, touting robust undercurrents despite turbulence. Kevin Hassett, head of the National Economic Council, beams optimism, dismissing volatility as fleeting. He insists tariffs enigmas will dissolve, tax slashes spurring investments and wage uplifts. Yet, skeptics snicker, with persistent swings mirroring deeper tumult. Will these words mend the breach, or widen the chasm of uncertainty? Eyes sharpen on horizons, investors scout inflation briefs, Fed rate decrees, and governmental bonds for shaky economies. Further confidence erosion could yank markets deeper. Critics long-eyed inflated stock prices, yearning for correction sparks. Dan Coatsworth of AJ Bell advises vigilance and diversification amid volatilities, as alliances fray. What unforeseen pivot could shatter these fragile accords? Trade renegotiations to refresh the United States-Mexico-Canada Accord ignited early. Commerce Minister Howard Lutnick and Trade Representative Jameson Greer huddle with Canadian brass, Finance Minister Dominic LeBlanc. Ambassador Kirsten Hillman, Premier Doug Ford. Revisiting the pact Trump forged in his debut term, superseding NAFTA and enshrined in 2020 law. Tariffs dangle as bait for continental concessions. Publicly, Trump blames illicit flows and migration tides. Privately, whispers unveil ambitions to reforge the deal he hailed as fairest, most balanced, most beneficial ever. What hidden motives simmer beneath this diplomatic ballet? A White House missive praises Trump's unyielding fair trade crusade, spotlighting Canada's métier. Rhetorical hints reveal aims, Mexico's state energy stances irk, China's auto encroachments sting. Yet, Mexico lags in Chinese ties. Canada's dairy shields and auto threats provoke, Ford vowed export energy tax abolitions, slashing steel aluminum tariffs from 50 to 25%. He cautioned, negotiations stretch far. It's about forging bonds. Sooner linked, sooner needs a line. Twisted intrigue, will greed and fear forge new paths, or ignite apocalyptic trade wars? Mexican leader Claudia Sheinbaum's cadre floated tariff elevations on China, matching United States levels. She stressed accord-bound partners, despite unregulated Chinese imports surging. Automakers brace for Trump demands. Current rules mandate 75% North American-sourced car content for tariff-free perks, else a 2.5% fee, often bypassed for cheaper exports. Some lawmakers from auto states echoed pleas. In this labyrinth, alliances teeter on razor's edge, families on breadlines counting costs. Can humble diplomats avert the crash, or are titanic forces poised to humiliate the bold? The suspense grips, as fortunes hang in balance, what revelation awaits beyond these steel curtains? The stock market is seemingly on the edge of chaos, with some analysts predicting a downturn that could shake the very foundations of the American economy. In a stunning revelation, big tech companies have suffered drastic losses, prompting investors to question the stability of their portfolios. Tesla alone saw a staggering 15% drop in its shares as the Magnificent Seven stocks including Apple, Microsoft, Alphabet, Nvidia, and Meta plummeted between 2% and 5%. Could this signal an impending crisis? The previous week had already ended on a sour note, with the S&P 500 marking a weekly decline of 3.1%, the steepest drop seen in 6 months. As uncertainty looms, President Trump has steadfastly refused to dismiss the potential for a recession, asserting that difficult transitions lie ahead. Meanwhile, Commerce Secretary Howard Lutnick confidently declared that a recession isn't looming today. Despite reassurances from some quarters, investors are increasingly anxious. This isn't just noise, investment analyst Shelby McFadden warned, reflecting the growing unease among market watchers. We've never been in a position where tariffs have been so openly acknowledged as a source of pain. As rumors swirl about possible job losses tied to ongoing deportations and government layoffs continue to circulate, the stability of the labor market looks precarious. Amidst this turmoil, George Calwan, a portfolio manager, painted a grim picture: this administration is nothing like its predecessor. The mix of policies could lead us to a rough landing. With the 10-year Treasury yield dipping to 4.21%. Investors are grappling with the sharp volatility gripping markets. Last week saw the dollar index suffer its most significant drop in over 2 years, shaking investor confidence further. As American equities and overseas markets tumble, Chinese stocks fell in light of disappointing consumer price data. What remains to be seen is how this volatile atmosphere influences negotiations on trade agreements within North America. Will governmental action be enough to stabilize the faltering economy? Or are we on the brink of a severe economic downturn lurking just beyond the horizon? Investors have been jolted by unprecedented market turbulence. Across the globe, stock indices have taken sharp declines, sending chills through Wall Street. With economic and foreign policy uncertainties weighing heavily, even seasoned analysts are left gasping for answers. Recent data from China revealed a surprising dip in consumer prices, further shaking confidence. Meanwhile, European markets also felt the tremors, diving 1.3% as defense stocks surged, creating a surreal juxtaposition in this chaotic landscape. The looming specter of high stock valuations, coupled with impending inflation reports and stagnant job openings, paints a precarious picture. The situation has stirred concerns about disappointing corporate earnings, particularly with giants like Tesla witnessing a staggering market cap drop of $125 billion in just one day. Delta Airlines, too, slashed its profit forecasts, echoing the apprehensions rattling investors. As anticipation builds, the question remains: will the markets descend further, or can they stabilize? The pressure from the ongoing tariff disputes with Canada, Mexico, and Europe has left corporate boardrooms in disarray. In an age where trade policies often dictate the economic pulse, many leaders are left reconsidering strategies. Lazard's CEO Peter Ozag voiced the mounting anxiety, noting that tech stocks bore the brunt of the fallout. Apple, Nvidia, and the S&P 500 all experienced steep declines, with the tech sector dropping a drastic 4.3%. As recession fears evolve, President Trump himself admitted the unpredictability of the current climate while hinting at a transition period, which could provoke further volatility. Could the administration's insistence on a robust economy be mere bluster in the face of growing evidence to the contrary? Looking ahead, investors must navigate an intricate web of fluid factors: tariff negotiations, market corrections, and potential policy shifts. With the Federal Reserve's decisions looming, how much more uncertainty can the market withstand? As tensions rise and uncertainties swirl, the stakes grow ever higher. What unseen forces might be set to strike next, and how will the market respond? The answer lies just beyond the horizon, shrouded in uncertainty. In the shadowy arena of high-stakes economics, where dollar bills rustle like leaves in a storm and screens flash red with panic, the ripples from tariffs keep widening. Imagine the bitter chill of uncertainty settling over boardrooms, investors gripped by sweaty palms as portfolios plummet. What if the architect of America's comeback is secretly welcoming a recession as his bold gamble? Kevin Hassett, guiding the National Economic Council's ship, insisted on optimism's wins. Yet, volatility battered the quarters with jagged spikes, leaving investors wary. Hassett urged resolution of tariff fogs and tax cuts to ignite investments, boosting real wages like a phoenix from ashes. But skepticism clings like damp air, its weight dragging markets deeper. Traders huddle, whispering fears of crashes ahead. So, what's rocking the boat? Watch the inflation reports reveal, Federal Reserve's interest rate whispers, and government stabilizers that could quell the tempest. Another dip in confidence might smash markets harder. Vivid valuations tower over equities, a teetering high-rise begging correction. Analysts scan for the final push, hearts pounding in speculative voids. Dan Cottleworth from AJ Bell echoed caution, as markets twist, savvy players must arm with info and diversify shields against the fray. Amid the uproar, negotiations stir prematurely for the United States-Mexico-Canada agreement, trades awakening a year early. Smells of polished conference tables and urgent meetings fill the air. Commerce Minister Howard Lutnick and Trade Representative Jameson Greer convened Thursday with Canadian elites, Finance Minister Dominic LeBlanc, Ambassador Kirsten Hillman, Premier Doug Ford. They revisited the intercontinental pact Trump forged in his first reign, dethroning NAFTA and sealing in 2020. Now, tariff blades beckon neighbors to the table. Initiative sparked by barbed wires of illegal flows and unchecked migrants? Publicly, yes. But insiders murmur deeper motives since day 2 of his second act. The twist? His aim to claw back the deal he once hailed fairest, most balanced, most beneficial ever etched into law. White House proclamations dodge clarity, touting fair trade pursuits in Canada's shadowed roles. Yet Trump's fiery rhetoric unmasks grudges. Long have his grievances escalated against Mexico's energy empires and China's auto intrusions. Mexico bucks lesser investments than America and her northern kin, yet faces the heat. Canada's dairy shields ignite his ire, auto factories menaced with shutdowns if disputes simmer unresolved. Ford relayed meetings where Lutnick probed renegotiations, promising Ontario's export tax vanishings on US-bound electricity. Steel and aluminum tariffs slashed from 50 to 25%. It's about forging bonds, Ford declared, time's clock ticking for mutual unveilings. Mexican President Claudia Sheinbaum's camp counters with pitches, hiking China tariffs to U.S. parity levels. Sheinbaum voiced on March 6 the priority of pact-bound nations over sourceless imports flooding Mexico. Her words sliced, a flood of Chinese goods without bindings. Truck vibrations rumble fainter. U.S. automakers brace for Trump's demands in these parleys. Current rules demand 75% North American lineage for duty-free perks. But a mere 2.5% tariff punishes cheats, often paid as cheaper evasion. Auto states lawmakers warn of fallout favors. The unexpected twist, amid market hemorrhages over $4 trillion in America's wake, Canada's stock sentinel tumbled today. U.S. markets suffered year's worst plunges, the Nasdaq shedding over 100 points from 2022's nadir, rebounding a scant 0.5%. Dow retreated 900, S&P 500 dipped 2.7%, Nasdaq 4.8%. Tech giants bled, Tesla 15%, Apple's 2.9%, Microsoft's 3.2%, Alphabet's 3.7%, Amazon's 4.8%, Nvidia's 5.2%, Meta's 4.1%. Trump deflected recession murmurs over the weekend, labeling it a grand transition for wealth's reclamation. Yet, Commerce Secretary Lutnick swore no downturn lurks. Investors fume at the recklessness, fearing a hard economic slam. Shelby McFadden at Motley Fool flagged unprecedented honesty on pains incurred. Hugs Jablonski at J.P. Morgan echoed stable labor for now, but threats of deportations and layoffs loom, weakening foundations. George Colony at Penn Mutual fretted radical shifts, charting a path to turbulent sigh landings. Last week's S&P 500 closed 3.1% down, keenest slump in 6 months. 10-year Treasury yield slid to 4.21% from over 4.31%. Wall Street Dollar Index nursed its lowest since early November, plummeting 2 years' biggest. Overseas, China's stocks crashed post-weekend inflation misses on consumer prices. Europe's Stoxx 600 fell 1.3%, defense shares rallying. February's inflation cues, consumer confidence, job openings data loom as market movers. But core culprits? Towering equity values versus history, tariff policy mayhem, earnings disappointments. Tesla vaporized $125 billion in market heft overnight. Delta Airlines slashed profit outlooks, shares down 14%. Recession specters rise, investors uneasy on incoming reports and rates. Trump admitted hating predictions, promising great deeds amid pains. Ross Mayfield at Baird noted administration embrace of market dips, even recessions, 4 goals. White House insists strength perseveres. Hassett, hedging, cited over-optimism reasons, yet confessed quarter data volatility. Tariff mists to clear soon, tax cuts to spur wages upward. Yet traders doubt, volatility mirroring anxiety. What perils await? Eyes on Fed, inflation unwraps, economy balancers. Investor drops could shove further declines. Concerns linger on United States equity peaks, hungering for adjustment catalysts. Codelworth urged vigilance, diversification defenses. In parallel, USMCA revival heats early. Lutnick and Greer linked with LeBlanc, Hillman, Ford for intercontinental revival. Preceded by NAFTA's demise in Trump's era, enacted in 2020. Tariff leashes draw neighbors. Illegal influxes, drug tides? Overt drivers. Hidden, revisiting justice's fairest, most balanced, most beneficial pact. Objectives blurring in mist. White House spotlights fair trade commitments, Canada's stakes. Rhetoric hints, Mexico's energy statecraft, China's Carswave X. Mexico, leaner in Chinese ties than rivals. But Canada's dairy barriers provoke, auto sheds hang by threads. Ford detailed talks post-electricity tax axings, metal tariff reductions. Bargains extend, relationships kindled first. Mexican overtures align China's tariffs with U.S. spines, favoring pact partners. Sheinbaum stressed Mexico's Chinese imports sans deals. Automakers foresee grips for regional content boosts, just 75% freeze entries, but token duties evade rules. Lawmakers and automotive hubs alert to skews. Markets hemorrhage, U.S. dropped $17.7 trillion off week start, worst in recent annals. Can bounce-back lore hold as Trump vows? Trump's tariffs, sparking retaliations from Canada, Mexico, China, bomb-fused stock tremors. Nasdaq's worst since 2022, up fractional remission. $4.21 trillion vanished yesterday, September's keenest bite. Canada's index waned today. Trump's predictions dodge recessions, hailing transitions for American richness. Rivals battle fears, calling no downturns. Critics slam folly, betting downturns for aims. Kevin Hassett preached optimism's virtues, yet volatile quarters stand. Tariff uncertainties to lift, tax slashes to fuel investments, real pay. Investors scoff, volatility airing worries. What next watches? Inflation unveilings, federal choices, stabilization acts. Confidence ebbs, risk deeper drags. Storied valuations warp, equity hunters await correction sparks. Codelworth, inform, diversify amid volatility. USMCA renegos spark early. Lutnick, Greer met Canadians LeBlanc, Hillman, Ford to reassess 2020 pact. Post-NAFTA forebear, Trump's first-term forge. Tariff threats entice talks. Public, curbing illegals, drugs. Actual, recoup Ferris deal. Murky intense. White House, fair trade pursuits, Canada's parts. Rhetoric unveils goals, Mexico energy, China autos. Trade imbalances vex. Ford on talks, bond building precedes needs. Long paths? Ford vows progressive links. Mexican emissaries suggest China tariff matches. Sheinbaum, prioritize pacts over unbound floods. Auto sector's I-content hikes 75% North American freeze, 2.5% breaches. States reps wary of leans. Is this the velvet glove over iron fist, or disaster's prelude? Stay tuned, the plot thickens perilously. What shocking betrayal waits beneath fair trade facades? Can key meetings avert total market meltdown, or will investor hordes revolt? The stakes soar higher, emotions fraying like tattered sails in a hurricane. In a bold move that rattled the very foundations of the U.S. economy, President Donald Trump has initiated tariff policies aiming to reshape trade relations with Canada and Mexico. But what is the real price of this strategy? The echoes of discontent are already reverberating through the markets, as fears of a recession loom larger than ever in the bustling corridors of Wall Street. The stakes are immense. Trump's administration has long touted its mission to rejuvenate the American economy, framing tariffs as a tool to reclaim lost glory. However, as the effects begin to cascade, the reality is hitting home. U.S. stocks plunged, shedding over $4 trillion in value after the announcement of these tariffs, with major indices like the Dow Jones and S&P suffering their worst days in years. Investors watch with bated breath, wondering, are we on the brink of a full-blown economic disaster? The financial world felt a sudden chill as the markets reacted to Trump's aggressive tariff policies. The Nasdaq and S&P 500 fell sharply, with technology stocks leading the downturn. Tesla saw a staggering drop in market capitalization, plummeting by $125 billion in a single day. The tension was palpable, as traders anxiously adjusted their portfolios, trying to shield themselves from the impending storm. But Trump's rhetoric reveals deeper intentions. Aiming to renegotiate trade agreements, Trump is leveraging tariffs not just to shield American industries but to pressure Canada and Mexico into compliance. As negotiations begin to take shape, Canadian Premier Doug Ford expressed his hope for building relationships, suggesting that mutual understanding would pave the way for successful discussions. The looming question remains, will these negotiations yield the stability that investors crave, or will they spiral into chaos? As discussions unfold, the complexities of international trade become clearer. Mexican President Claudia Sheinbaum has proposed raising tariffs on China to align with U.S. rates, a strategic move that could reshape the economic landscape. Meanwhile, U.S. automakers are pushing for adjustments to meet compliance requirements that could either benefit or further jeopardize North American suppliers. The political chess game intensifies, and stakeholders are left to ponder, will concessions lead to a favorable outcome, or will they set the stage for further conflict? These swirling uncertainties heighten the tension as the administration's grip on the economy appears precarious. Investors are left questioning the sustainability of Trump's bold promises. With inflation reports and interest rate decisions on the horizon, the future remains foggy. Will the strategies being employed truly boost the economy? Or are they mere smoke and mirrors masking deeper troubles? As every day unfolds, the stakes rise, and the answers remain elusive. The unfolding story is one of ambition clashing with reality, an intricate dance of power and peril where every decision carries weight. Keep your eyes peeled, for the twists and turns are bound to keep us on the edge of our seats. What does the future hold for the U.S. economy? And will the dream of renewed prosperity become a reality or a mirage? Continuing from the last segment, where the USMCA, the United States-Mexico-Canada Agreement, mandates that 75% of a vehicle's value comes from North American suppliers for tariff-free entry, the low 2.5% penalty for non-compliance tempts some automakers to opt out and ship cars anyway. Elected officials from states heavy in car manufacturing are clamoring to hike that fee drastically. Can you imagine the roar of factories grinding to a halt, the sharp sting of rising prices pinching every wallet, and the bitter tang of economic chaos choking international alliances as one senator's bold push threatens to ignite a global trade inferno? Picture the thunderous clash of steel tariffs slamming down, each one a hammer blow to prosperity, leaving billions in shattered deals and reeling industries wondering if America's economic fortress is crumbling from within. To punish overseas car manufacturers while sparing North American allies, Senator Bernie Moreno argued fiercely. The penalty for ignoring the USMCA rules must skyrocket tenfold. This demand aligns perfectly with President Trump's announced 25% levies on worldwide vehicle imports, set to kick in on April 1. Feel the tension in the air, thick like fog before a storm, as Republican lawmakers warn of looming instability. More uncertainty could sabotage the agreement, eroding market confidence and slashing company earnings. Senator Tom Tillis, his voice steady but edged with concern, explained it this way. We're polishing a pact Trump secured in his first term. But a total overhaul? That might unleash chaos, he cautioned. Gesturing as if warding off a phantom threat. In that charged atmosphere, a 25% duty hit goods from Mexico and Canada on March 4, with a 10% charge slashing energy products and potash soon after. The rough grind of economic gears twisted tighter. Yet, the Trump administration paused those fees until April 2 for vehicles qualifying duty-free under the USMCA. By March 6, all USMCA-eligible items enjoyed the same reprieve. Many imports, however, skirt the rules, now facing the full brunt of new tariffs. The bitterness of retaliation spiked. Canada struck back with $21 billion in duties on American exports, crispy fruits, gleaming appliances, and spirited liquors feeling the burn. Canada vowed extra levies worth $20.6 billion on U.S. goods to counter Trump's steel and aluminum tariffs. Mexico, simmering with plans for payback, held off enacting them by March 12. The administration's hammer fell again, layering 25% tariffs on all steel and aluminum inflows. Canada's response came swift and sharp, mirroring their earlier move with duties on $20.6 billion in American imports. Across the Atlantic, the European Union retaliated with a 50% duty on U.S. whiskey, rumbling motorcycles, and sleek motorboats starting in April. By mid-April, they added duties on American chewing gum, poultry, soybeans, and more. The European stance left a sour taste, like stale coffee lingering on the tongue, unsettling and unavoidable. President Trump countered aggressively, threatening a 200% tariff on EU alcohols, his words echoing like a distant thunder. But what seismic shifts lie in the shadows of these February 3 maneuvers? When the first ripples began? Watch as alliances fray at the edges, each retaliation a jagged thread unraveling the global economic weave, begging the question, will this storm of tariffs forge a stronger America, or shatter it into isolation, leaving families huddled in the chill of uncertainty and forsaken dreams? The recent developments in trade policy have stirred up significant tensions, particularly between the United States and China. As tensions escalate, President Trump's administration imposed an additional 10% tariff on Chinese goods. This aggressive stance was met with swift retaliation from China, which implemented a 15% tariff on U.S. coal and liquefied natural gas, alongside a 10% levy on crude oil, agricultural machinery, and other products. These tariffs came into effect on February 10, marking a critical turning point in the ongoing trade conflict. Fast forward to March 3, and Trump again decided to raise tariffs on Chinese imports by another 10%. China's response? They escalated matters further, imposing tariffs of 15% on staples like U.S. chicken, wheat, corn, and cotton. Additionally, items such as sorghum, soybeans, pork, and seafood faced a 10% tariff, which started on March 10. As if that wasn't enough, China also took punitive action against 15 American companies by restricting exports to them. Adding fuel to the fire, Trump threatened to impose a sweeping 25% tariff on all goods from the European Union, yet did not enforce this on March 4. Anticipating further chaos, he announced that on April 2, the U.S. would enact reciprocal tariffs against any trading partner that retaliates with tariffs or other trade barriers. These reciprocal tariffs would match the levies imposed by the trading partners in question, whether they hail from the European Union, China, India, Mexico, or Canada. However, it was indicated that the actual implementation of these tariffs might take 6 months or longer. The stakes are high, and the question remains, how will this escalating trade war affect global markets and economies? The tension mounts as investors prepare for potentially dire outcomes. What untold consequences lie in wait as these nations grapple with their trade futures? The financial world buzzes with speculation, but will these tariffs lead to economic recovery or further decline? Only time will tell.